Hello everybody, welcome to day 10. Michael here. Day 10 of our Simple Trade Profit Systems free training course. Today's video is going to be probably a little bit more technical, a little bit more in depth. It's going to be about Fibonacci. It is a tool that I use. Most traders do use. And it's going to fit in well with a strategy we've been developing already, because Fibonacci is a lot to do with support and resistance as well. So I'm going to go through like a little brief history about it, what it is and where it is, because it's all over the place. It's not just in charts. And then we'll get into how we use this on our charts. So as I said, it's going to be about Fibonacci. Primarily Fibonacci retracements. I know there's other ways that we can use this. You know, there's Fibonacci extensions, there's Fibonacci circles, but Fibonacci retracements is the main one used by traders. So let's get started. Fibonacci numbers and lines. Fibonacci numbers are used to create technical indicators using a mathematical sequence. They are essentially is a mathematical sequence, a ratio of numbers that shows up in our lives everywhere. It shows up in the genetic makeup of our body. It shows up in our DNA. It shows up in nature, like in the veins in a leaf or the petals of a flower. It's all over the place. It's in movies, it's in music, it's all over. It's really interesting. So it was developed by an Italian mathematician in the 13th century. And the sequence of numbers, and this is, I'm going to go through this history and kind of like so you guys can get an understanding of what it is before we get into how we use it. So I like to understand, you know, why something is the way it is or why it works the way it works. So that way when I'm using it, it just helps me use the tool better when I know why it's doing what it's doing. So it's a sequence of numbers that is created by adding the first two previous numbers. The early part of the sequence looks like this: 0, 1. 0 plus 1 is 1. Let me pull out my pen here. So you add the previous two numbers to get the next number. 0 plus 1 equals 1. 1 plus 2, or 1 plus 1 equals 2. 2 plus 1 equals 3. 3 plus 2 equals 5. 5 plus 3 equals 8. 8 plus 3 equals 13. 13 plus 8 equals 21, so forth and so on. You add the previous two numbers to get the next number. And then the ratio, besides the very first few numbers, the ratio of these numbers comes out to about 1.618, which they call the perfect number, the perfect ratio. So all these numbers, if the ratio between these two that you're adding together will be 1.618, and as we get farther in the sequence, it gets closer and closer to 1.618. Oh, let me take my pen off. All right. So the sequence can be broken down into ratios, which is believed to provide clues as to where a given financial market will move to, because we see the ratio of these numbers in everything in life. It's really interesting. You look up like Fibonacci, the golden ratio or the golden number, you'll kind of have your mind blown. So Fibonacci's numbers and lines. Fibonacci numbers and lines are created by ratios found in the Fibonacci sequence. And these ratios is what we're going to use is what we're going to use as support and resistance when we work on the Fibonacci retracement. Common Fibonacci numbers in financial markets, these are your main ones, are 0.236, 0.382, 0.618. They're missing one. One of them is 0.786, I believe, and then so forth. But the main ones that Bitcoin really loves is 0.382, 0.618, and 0.786, and 0.5 as well. And these are percent, so 23%, 38%, 61%, 50%, and 73%. These ratios or percentages can be found by dividing certain numbers in the sequence by other numbers. So for example, the numbers reflect how far price could go following another price move. So in this example, if a stock moves from $1 to $2, Fibonacci numbers can be applied to that. So if it moves from $1 to $2, it moved up $1, a drop back down to $1.76 is a 23.6% retracement. So price moved from 1 to 2, and then it came back to 176. That is a 23% retracement, which is one of our Fibonacci numbers. A price from 1 to 2, and it moves back to $1.50. That's a 50% retracement. If we move back to like $1.40 something, that would be a 61.618 retracement. So we use this on swings. So like a low to a high, and then we talk about pullbacks. When it's going to pull back, we use it to determine how far it'll pull back. Remember, I said when Bitcoin swings up, when it comes to pull back, it likes to pull back to the 50%, 61%, and 73% areas. The most common Fibonacci tool is called Fibonacci retracements. Fibonacci retracement measures how far a pullback will go, just like I said. So I got a slide here. We're going to look at an example, and then we're going to go to the chart, and I'll show you a bunch of them and show you how to draw them. And I put this in here, yeah. Bitcoin loves the 50% all the way up to the 78.6. I was saying 73.6, 78.6 zone. So it loves to retrace either from a low to a high and then a pullback low, or from a swing high down to a low and a pullback back up high. It loves to retrace between the 50% to the 78% zone. And I've referred to this the golden zone. You may have seen me mention that in some of my VIP posts. So this example here on the right, let's look at this. So we have price moving up from its low all the way up to its high, and then it starts to retrace back. What we do is we draw our Fibonacci retracement from the low to the high, and then it plots these lines, these numbers on the chart, the 23, 38, 50. In here we also have the 618 and the 786, which are going to be lines in here as well. So these main ones right here are the ones that we use. 236, 382, 50, 618, 786. So when Bitcoin swings up from a low to a high, we can then draw our Fibonacci retracement tool that will plot these lines on the chart to give us an idea of how far we're going to pull back. And remember that Bitcoin loves that in between here and here. It loves to retrace in these areas. So I have the daily chart pulled up, and you can find the Fibonacci tool over here on the left. Don't just click this little arrow right here and go to Fibonacci retracement. So let's look at from the all-time high, from this all-time high to the swing low. And we can see how far it pulled back. Is that where I want to look? I believe so. Let me draw it real quick and see what it does. Nope, wrong way. So I need to draw it from the top down to the bottom. So we can see from this swing high all the way to this swing low, and it plots these lines. 236, 382, 0.5, 0.618, 0.786, and 1. 1 would be 100%. So if it moved all the way up here and then came all the way down and then went all the way back up here, that would be a 100% retracement. It came back all the way up. Well, we can look at how price just reacted to these levels. So it came down. At this point, we have our retracement, and we have it reacting here to the 382. So it came back, it retraced here. If we were in this area right here, because let's say we're right here on the chart. This hasn't happened yet. We're right here in this area. It's swing high down to this swing low, and then it started to come back up. Look, we almost made it to the 786. It went past the 618 and it was almost to the 786. So that was almost that was about a 76% retracement. Let's look at this high to this low. So price came up from its high, came back down to its low, and it starts to move up. We're like, how far is it going to move before it potentially reverses back down? And we see that price came up to the 618, just barely above it. And then from there, so it retraced up 61.8% before continuing down. And you could draw this. I'm telling you, they're all going to be pretty similar. From this high down here to this low, I'm just stretching it out. We see price came down from its high to its low and then retraced back up to 61.8%, almost exactly again. Some more recent ones. Let's look at these highs and lows right here. So from this high all the way down here to this low, I'm just going to stretch it out. We see that it retraced back up to the 786, then it came back, it retraced back up to the 618. We see it then came up and reacted to the 382 twice before continuing down. And then so we're looking at the retracement of a high to low and moving back up to a high. But in this example, we could draw it a couple of different ways, because you can also draw them from low to high if we're in an uptrend, So if we're in an uptrend and we want to see how far it'll pull back down before continuing higher. But so far, if you look at this bigger picture, we've kind of been in a longer downtrend. So we can draw it from this high all the way to this low, and let's see what this retracement right here was. I haven't done this one yet. So from this high all the way down to this low, look at what Bitcoin did. It came back up and it retraced almost, or to the 50%, almost to the 618. Oh, here it is, yeah. So from this low right here, all the way up to this high, so we were trending up. We had a pullback, and once we had price move up from here to here. And once we start to pull back, we're trying to figure out, where are we going to stop pulling back at before we continue higher, okay? Well, look at what Bitcoin did. It came from this, I'll stretch it all the way over. From this low, came up, started to pull back, and we're trying to, and at this point, since we already have this low and this high, we can have this drawn. I've had this drawn on there, but sometimes I remove it because it just looks too cluttered. And look at what we did. We came back and we retraced and bounced perfectly right off the 618. And then shot straight up ever since then. And that was at 64.68. And remember, if you remember yesterday, me and Drew were talking about 6,400, that 6,400 area, because it lined up with our support line. It lined up with a trend line that I had drawn. And then the last post I think I made before the end of the night it was also our 618 retracement area. And we see that price came down to right about $6,450 before rebounding and going straight up, almost basically straight up. So we had a 61.8% retracement, and now we're continuing back up. So we can move, like I said, to lower time frames. It works. It's on everything. So let's look at like this high to this low up to this retracement, and let's see. I bet you that's in between 50% to 61. I bet you that's right about 61.8. So from our swing high down to our swing low, perfect. Right on the 61.8 before continuing down. And we have this drawn because when price comes up and it comes back down, once it starts to move back up, we can plot this on the chart. And we can say, how far do we expect price to move back up before it, gets rejected? And it moved right back up to the 61.8. Let's look for another example. Let's look right here. From this high to this low, and let's see how far this retracement was before it came back down. Oh, Would you look at that? Right on the 618 again. Perfectly. Bounced right off of it. Came down. Came almost up to it again before getting rejected and coming down. Let's go back and find a few more. And if you start drawing these on the chart, you'll notice that price reacts to some of these lines all the time. Look at how we have price reacting. Here it bounced off the 286. Did I draw this the wrong way? I think I did. No, I didn't. Let's look at another one. Let's look at from this high down here to this low, or from this high to this low, see how much this retracement was. Then we'll do this high to this low to see how much this retracement was. So from here to this low, bounced up off the 786 retracement. Now if we do this high down to this low right here, I'm just stretching it out. We came up, started to get rejected at the 618, but broke it a little bit before getting rejected down. Let me find one more just so you guys can get used to how to draw these. So let's look at this. From this high to this low and this retracement back up. Look at that, right? So you can tell that always between the 50% up to the 786 is the area that Bitcoin loves to retrace to. It came up almost to the 786 at $8,260 and then came back down, or came down here, came all the way up to the 786 again, got rejected, and then, you know, hovered around between the 50% and 61.8%. So this is a good tool to use, especially now, to see, you know, where we could be headed to, where price is going to react to. So let's go from this low to this high and see what it looks like. So that's why, you know, some people, if they think that this is a high and we start to continue down, some people think we could come back down, you know, to the 5,300 range or even 5,600, because it could come up and retrace back down before continuing higher. It's a possibility. We can see how prices reacted to these lines just over the past month or so, from that low to that high. There's a lot of reaction to these areas. You know, we hovered around here on the 618 for a little while. We bounced around between the 38 and the 236. You can see how these have acted as support and resistance. This one was support here. It was support here. It's been support here. This one was support along here. So it's not something you want to use just by itself, but it is a tool that you can add. So when you see remember I was talking about a confluence of support, confluence of resistance. You know, if we have a horizontal support, a trend line support, one of our EMA supports, and then we show a 618 Fibonacci retracement support, 4 different supports showing, then, you know, that's a high risk to reward or low risk to reward trade. You know, let's say you're going to buy off that support and you have 4 things showing you that support, or, you know, flip it around, resistance. If you have horizontal resistance, you're at the top of a trend line, you have an EMA up there, and you have one of your Fibonacci levels that has shown to be resistance in the past. Well, then that's a low risk to reward trade if you're looking to short. So it's definitely something you can throw into the arsenal and use. You can do it on lower time frames. Like I said, I mean, it's going to be all over the place, from highs to lows or from lows to highs. If you're doing it from a high to a low, you're trying to see how far it's going to retrace back up. If you're doing it from a low to a high, you're trying to see how far it's going to retrace back down. So hope it helps. It takes time to get used to it. I played around with it for a while before I really fully understood it. And I would draw them backwards in the wrong way sometimes. So just get used to drawing them, look at them. And if you're on the 5-minute chart, you can draw them there. You know, if you're trending up and then it starts to pull back a little, and you're trying to figure out where you want to buy back in because it's going up, it's trending up, and you want to figure out where you're going to buy back in. Look to those 50%, 61.8% areas as support, and see if they line up with any other supports that you have drawn on your chart, and it could be a good spot to place a trade. So if you guys have any questions, just let me know, and I'll talk to you later.